Welcome back. You're watching Closing Trades live on ET now. Two stocks, one from the mid-cap space and the other one from the large-cap space. Two ends of the spectrum, one infra, the other one auto. Infra is related to investment demand, auto ancillaries related to consumption demand. Amra Raja, after those numbers, markets are really rewarding that stock. 367, up 48 rupees, and the second one is L&T, which is again leading the charge. 1456 for L&T. If you map how L&T has moved this year, despite a very broken down investment cycle, L&T, which is India's largest engineering and construction company, this year has appreciated by a good solid 35% plus. So talk about one side, the fundamental turf, and the second side, which is what is happening to our markets. That's L&T for you. Even better, this year L&T has appreciated by 46%, and the index is up only 15-16%. So that just tells you the kind of stark outperformance L&T has registered in this calendar year. Sanjeev, I just want to stay with the topic of ETF, and like you had pointed out that globally a lot of money is coming to emerging markets via the ETF route. Why is that happening? Any thoughts on that?
No, that's because of the fact that it's very easy for people to basically look at India and say, let's take example of India, and they say, rather than buying a specific stock or two stocks or five stocks, they say, okay, I want to buy India because India has a growth story, and what's the best way to invest in this country? You look at a Nifty ETF or possibly a MSCI or a Sensex ETF and say, okay, this makes sense. Rather than worrying about which stock to pick up, I want to get into this market pretty quickly because I think it makes sense right now. All you do is basically buy an ETF which is available to you, and it's very simple and easy to invest for you, and you really get real-time prices. So even if your market, say for simplicity's sake, go up 3-4% during the course of the day, if you buy in the morning when you think the market's doing well, this is the best way to invest. And it's not just the emerging markets, to be honest. If you look at the worldwide phenomenon, most of the money now is coming through the ETF route, even in the developed markets like the US. So they are becoming the instrument of choice for most of the people. So that's really what's happening.
Sanjeev, if money is coming via the ETF route, then why is that we have a difference of performance within the Sensex? BHEL is down 3% this year, L&T is up 46%, Reliance is flat, and BPCL is one of the biggest gainer.
No, as you know, in an ETF, you're agnostic to which stock you buy. So there will be people who basically pick up stocks which make sense for them at that point in time, and some people might be buying more of X stock as compared to a Y stock. But if you're an investor in the broad market, you're agnostic to which stock you buy. So even if a certain stock is not going up or down, you are buying the overall index of the country or of the market or of the sector you want to invest in, and that's why you don't care as to what the movement in a particular stock is. Really speaking, any ETF player and all the money which is, as I said, nearly 70% of the money is coming through ETFs, is pretty stock agnostic in that sense.
Right. With regard to India, Sanjeev, where do you see more money coming in? Essentially index-related ETFs, gold ETFs, or some sectoral ETFs as well?
If you look at the Indian market, which is basically the flows from the Indian investors, really the money until now has been pretty strong in the gold ETFs. But slowly we've seen people really moving into, very slowly, into the equity ETFs in the last month or so. That's a very positive sign. But the bulk of the money really did come in gold ETFs. But the more heartening sign, to be honest with you, is the fact that more and more investors are getting into the ETF space. The growth of ETFs since 2009 is nearly 100% every year, albeit more in gold. But even in equity ETFs, it's nearly about 35-40% money flowing into the ETF space. Where if you look at the other asset classes like mutual funds, you haven't seen much money coming in. So people are slowly coming into ETFs, more gold, but slowly and surely in the last at least a month and a half into the equity ETFs.
That's a fair point, but if I look at how globally ETFs have moved, whether it is US-based ETFs or European-based ETFs, globally ETFs are a multi-billion-dollar industry. And the size of Indian ETFs or the size of Indian ETF industry, it's not even, $2.5 billion?
Absolutely right, Nikunj. In fact, if you look at the international markets, nearly close to $1.5 trillion now. Our belief is, if you look at really what's happened in the international markets, the ETFs were launched in the mid-90s and they have seen humongous growth. And we think that, we are in that space now where ETFs are going to, we're literally poised to take off. I mean, just to give you a data point, I mean, as you said, India is, we are at $2.5 billion right now. But in 2009, we were just close to, if you look at the numbers, we were close to about, nearly $300 million. So we have nearly 100% growth rate in the ETF space in pure AUM numbers. And if you look at the number of investors, they also have grown 76%. So year on year since 2009. So that's a very, very heartening sign. And we believe that, we have come to a point, if you want to call it a tipping point or, the upside of the J curve. We think in ETFs, in India, we are now at that point. It's happened in Europe. It happened in the other Asian markets. I think in India, we are at that point at this point right now.
All right, Sanjeev, we leave it at that. Thanks very much for joining us and giving us your perspective on money flow into the markets and via the ETF route. Appreciate those analyses. We'll take a short break right now. As we do so, here out another market void. Devin Choksi, MD of KR Choksi Securities, is bullish on HCL Tech. He thinks Maruti is a good buy, close to the 1100 levels, and has a positive view on big PSU banks.
Current rally in the HCL Tech is largely to catch up with the valuation with the peers, A, and second is also portfolio shifting from the other companies into them, and that's where we are seeing the upside in the move. We believe that 590, 610 could be the price target over 12 months for this company. I think Maruti is a good buy, provided I think we start seeing the environment becoming more clearer for the consumption space as a whole. And if you see the amount of money coming into the system for spending, it would probably mean that I think many of the auto companies would become a good buy. So Maruti could be, I think, a good opportunity at lower levels. I think one will have to wait in this quarter as to see if the stock is available closer to 1100. Cipla is very, very clear, both on the generic ANDA side as well as I think the kind of a higher production coming from the newer factories that they're putting in the formulation side. I think Cipla looks very, very clear. So the leadership may change, and I think the appreciation of 25 to 30% should be possible in a company like Cipla over the next 12 to 18 months time. Within the PSU banking space, I think would stay with the frontline PSU banks like State Bank of India, but I think would try and avoid as much as possible on the lower end of the PSU banks. So SBI, BOB could be, I think, a choice, but not as much on the lower side of the PSU bank.